I was watching a lot of videos this morning and watching a lot of content, and I found that I had to post something. So I'm going to try to start posting possibly every day to just give you guys a market recap of what's going on, and then kind of put some, a lot of the rumors or a lot of that false news that's out there, just kind of put it in context. So what I want to go over today is basically what the markets are doing, why they're doing what they did, what we predicted, and a bunch of other things. So let's get over to it. So what we want to talk about today is exactly this. So here's what we're seeing on the screen right now. This is what the markets are doing. We updated our MBS charts. So what you're seeing on your screen is basically what the bond market's doing. In the middle is the one that we follow. It's the MBS 6.0. It's the chart or the bond that we follow to figure out what in the heck mortgage rates are going to do. So again, what you're seeing on your screen is if the number goes up, that's good news because rates are coming down. Going up by plus 0.08 is really going to do nothing. But yesterday was a huge day. You can see the 10-year treasuries doing what it does and so forth. But I watched some videos today, and I just posted all over my social media that a friend of mine, Jaspreet Singh, he did a video it's right on point. So if you watch me or follow my channel, you've seen him on my channel before a few times. And I just posted his video out there so you guys can see it because he breaks it down exactly what's happened. Because a lot of people are just saying, hey, the bank failed. They were idiots. They didn't know what they're doing. They over leveraged. And yes, some of that is true. But what's not true is, the federal government is bailing them out. Okay, it's not how that works. So basically how it works is this, and then I'm going to go off to some other economic news, like the Federal Reserve. They're meeting next week. What are they going to do? And some other things. And I'd love to answer any questions that you have. That's why I do this, is because I want you guys I don't want to be the person that tells you, don't buy stocks. They're going to crash. Don't buy a house. It's going to crash. Or buy a house. You're going to have great investments. I want you guys to think for yourself. And my goal is to kind of educate you. I was thinking of changing my channel to like the OG in the mortgage industry or the market guidance or whatever. I have no agenda here, guys. You can't go through me to buy stocks. You can't go through me to buy bonds. You can't go through me to buy cryptocurrencies. We help you with your mortgage if you need help with a mortgage. But truly my goal in life is to help you guys at least understand things and not get duped by those that are out there saying, oh, the federal government, here we go again. They're going to bail out these stupid investments. So let's get over to it. What you're seeing on your screen right now is what's going on with mortgage rates and bonds and things like that. And then we have the economic news and such. If you want this, if you're a mortgage person and you'd like these tools, I have a subscription down below. You can get it. You can get this and you can get a discount on it. But that's not why I'm here. The reason why I'm here is let's just go through what the markets are doing. Now, remember the markets just crashed yesterday. And I said, guys, I'm not saying it's a completely isolated incident with one bank, because this can happen with a lot of banks. But it really not going to happen to huge banks. And it's not going to, a bank's not going to collapse unless they have a run on the market or run on the bank. Okay. So what was happening behind the scenes is they just didn't have enough in reserves to cover all the loans they have and everything else. That was it. And they had to market some of their investments. They had to sell off some treasuries to make them self-solvent and so forth. And the FDIC stepped in. Now, the FDIC is like insurance, okay? Banks pay it, you pay it in your service fees and all this other stuff. So it's an insurance policy if the bank fails, okay? So it's not coming from the government. It's basically an insurance policy set aside that if and when the bank fails, there's the depositors, you and me, just because a bank failed doesn't mean all the depositors are bad people. It just says, people are losing money. But what you got to be cognizant of is that insurance will cover you up to $250,000. Now, for those that have more than $250,000 first, God bless you. The next thing is maybe spread your wealth around, because what will happen now? I want you to educate you guys on what exactly will take place at this point. So that the bank will go up basically for auction. All right. So some bank or some entity will come in and step in. Hey, Kyle, looky at who's is live, dude. You'll be here. Actually, Kyle's in town, and he was on something I did this morning, and we'll be live, I think, from my office tomorrow. So, Kyle, thanks for joining us, buddy. I hope the video and the audio is good. But what will happen is the bank will go up basically for bid. Like if you got foreclosed on your house, it goes to auction. So right now the FDIC steps in and they're trying to find a buyer for the bank. Okay. So the FDIC is going to insure anybody that it had deposits under 250,000. So you could have started going to the bank as of yesterday to get your money. I also posted a video the other day where it was an 800 number where you can call the FDIC to figure out, what you can do if you're in that situation. So now what happens is, I'll say this meticulously, no, the government's not going to step in and give everybody all their money back. That's not going to happen. And there's so many mainstream media and YouTubers and everything saying that. What will happen is an entity will come in and buy out the bank or take over its receivership. Then what they'll do is they'll analyze all the books and they'll come back and say, well, the people that had money over $250,000, how much money are they going to give, those people? They're not going to get 100% of their money. In the cases back in 2010, there was over 400 banks that this happened to. The average was about 40% of the money got returned to the people that had money in the bank. So no, the government's not going to step in. No, the banks aren't going to print money like some people are saying. They're going to print it, and just start, funding themselves. That's not how it works. Banks don't print money. So if you're watching somebody who says the bank's printing money, turn the channel because they don't really know what they're talking about. The Federal Reserve prints money. Okay. But what's the bank's going to do is they'll get bought out or the receivership from another bigger bank. And that bank will decide, okay, we're going to pay everybody that had, $1 in the bank, they'll get 50 cents. So you can probably expect maybe 50, 60 cents on the dollar for the deposits over that amount. It could be a little bit more if they want to keep the brand of that bank going, or they could be a little less. They're saying, there's really no value in this bank. So we'll take over all the depositors. We'll try to make them as happy as we can, and then kind of move on. So hopefully that debunks that. Another piece of this puzzle is, like, for example, Charles Schwab yesterday got crushed. I think the stock was down 30%. Well, I just watched an interview with the CEO of Charles Schwab, and he's like, guys, you have to understand what's behind the scenes. Charles Schwab I think they had a couple $1 trillion in investments. Their investments aren't a part of their banking system. So if you have an account with Charles Schwab, you don't have to worry about losing the money unless your stocks lose. But they also have Charles Schwab Bank. All right. But it's not the same entity. So everything got washed out in the bathwater yesterday. That's what if I was saying. If I had a ton of money, I would have been buying some of these bank stocks, because you can see, I think I have something on the board. One of the stocks is up this morning, opened up 40%. 40%. So imagine if you bought last night at the close, this morning you would have experienced a 40% return on your money. So I expect those people to just sell out or sell a good piece of their portfolio. What I would do is I would sell out, take all my profits out, or all my money original investment out, and then leave my profits roll. I'm not a financial planner, not an investment counselor. I'm not giving you guys advice on what to do. I'm just telling you what I would do and use it for entertainment and educational pieces. Okay. So next thing is where I want to see is the markets. Here's where the markets are, and they close for the day. Look at the Dow Jones. It's up over 300 points. So if there was if Wall Street thought this was going to be basically an epidemic of banks closing, you wouldn't see the Dow up 300 points. Okay. So everything just got washed out yesterday. I can bet you a lot of hedge funds kind of were cheering in the background, watching everybody sell in the banking sector. And they just came in and swooped up, and they're going to make some huge profits. So that's what you're seeing here. Some other news that's out today is oil prices. And I talk about oil, and one of the main reasons why I talk about oil is it's a huge part of our inflation. All right. It is down. And then now it's in a bearish market. I just read some reports. It's possibly in a bearish market, means the oil prices are going to start coming down and down and down and down. So you could start seeing some reprieve at the pump. And also you might start seeing that part of the inflation numbers coming down. Speaking of inflation, we're going to get to that kind of coming up. So the CPI inflation gauge increased 0.4% in February as expected, and up 6% year over year. Now you're going to see some of the mainstream media and other people on here saying, oh my God, inflation's still skyrocketing and whatever. Guys, put some of this into context. When the video is done, what I'm going to do is I'm going to put all these things that I'm talking about. I'm going to put the links down below. Check them out on your own. Please do your due diligence. Don't just watch somebody for 15 minutes and make life-changing alterations for yourself. But what we want to do is let's dig down into this a little bit. The consumer price index rose 0.4% in February and 6% year over year. A drop in energy helped keep inflation in check while shelter costs increased. Okay. Well, we're seeing oil drop even more from when this report came out. The oil from today, the drop that you've seen right here, you got oil down 4 4.5%. It's not baked into this number yet. So that number is going to go down even more. But then the probability of the Fed, that the Fed would raise benchmark interest rates 0.25% next week increased followingly. So a lot of analysts were saying, okay, because of what's going on in the banks and some other numbers that came out, maybe the Federal Reserve won't increase rates as much as they thought they would. So the Federal Reserve, what was expected after the last jobs report, 2 readings back, was there was over 550,000 new jobs were created. So then everybody said, oh my goodness, the Federal Reserve's probably now going to raise rates by 0.5%. So I got some really good information for you on this here in a second. So you go down through here, and here's where inflation is kind of, where it is all over the place. Inflation rose, consumer price index went up 0.6, but I want to go down through here. Here's where the charts are. So you can see back in this area here in June, that's when we capped out at 9%. So we're at 6% now. Okay, I'll take it. It's a 3% drop. I would rather have it, go down to 6 than go to 9.25. Then you're going to see the markets just completely crash. So that said, let's go bow down through here and find out where most of these areas are coming into play. So we had food prices, they're up 0.4% and 9.5% year over year. Meat and poultry and fish and eggs fell 0.1%. They're still up huge. The first time that index has retreated since December of 2021. I don't know if you guys remember, but I put a caption in this morning. I was talking about eggs. And then here it is. Eggs in particular tumbled 6.7%. They are still up 55%. Could you imagine something that you're buying is up 55% in 1 year? Kind of crazy. And then we go to the shelter costs. We got shelter costs here, and it is a huge lagging indicator. And that's why I keep saying the Federal Reserve needs to kind of slow down. They're screwing up everything. Now you're seeing the banks going under, some banks going under. Shelter costs, would make up 1/3 of the index weighs, jump 0.8%, bringing the annual gain up to 8.1%. Federal officials largely expect housing and related costs such as rent to slow over the course of the year. Guys, let's take housing in 2 pieces. On the purchase side, well, yeah, it's going to go up because rates, if everything just stayed the same, just by pushing rates up from 3 to 7, which is doubling, is going to cause this effect. So you have to put some of this into context. Federal Reserve, you're the one that's kind of pushing the shelter piece out of whack. And then we have Kyle and I have a show every Wednesday. It's live. Check us out tomorrow if you would. And we talk about housing, and we talk to a lot of first-time home buyers on our videos. And in those videos, we found out that probably 75% of the people that are viewing our channels, they experienced between 10 and over 20% increase in their rents over the past year. Now, there was probably 25% of the people said, I didn't experience anything. The rest of them, it was plus 10 and greater that experienced those changes. So that's just that in the context. Next thing I want to say is here's the headlines. I'm going to Yahoo Finance. I'm kind of boycotting CNBC a little bit. Jim Cramer drives me nuts. And some of the there's an agenda there. And guys, like I said, I really don't have an agenda. You're not watching this to buy stocks through me or anything. So I'm just giving you my point, and I've spent 34 years in this business. Regional banks rebound, leading stocks rise, and as the CPI number comes down. So, okay, bank stocks are rebounding. Inflation rises at slowest annual pace since 2021. Then we have oil. Chevron isn't complying with things. Well, then go hit them. But the problem is with the oil companies, if they do something wrong and you fine them, they're just darn near making so much money that they can pay the penalties. All right. So now let's go over the economic calendar that we just saw in the last 2 days. Well, basically today we saw the consumer price index and all that came in line. Tomorrow we have core retail sales. That's going to play a bit of a role in this. We want to see what sales are doing. We're hopefully they're coming down. That's what the Federal Reserve is wanting. The PPI, that's producer price index. So the difference between the CPI and the PPI is the PPI. Let's start at the beginning. The PPI is the producer price index. So let's say it this way. If on the producer end of the equation, their prices on everything is going up, then most likely what we'll expect, hold on one second, is that to come down. So the company has a couple different options. Raise prices, and they're having a tough time now because prices are getting out of hand, or cut costs. Okay, that's what they're doing. So if you start seeing a lot of, you'll see laying offs and things like that. That's what the Federal Reserve's goal is at this point. They want layoffs to start slowing down people from purchasing things. Okay. But again, if on the PPI, the producer side of the equation, if the prices on them are going up, most likely we're going to have that roll over to the consumer price index, and it should be basically equal. If it's less, then that means the producers are going to make less money. Less money means less revenue. Less revenue means less profits. Less profits means less sales. Less sales means you need to start cutting expenses. Okay, so that's what's happening on that realm. All right, so the next thing is we want to see is what's the Federal Reserve? What's the expectations that they're going to do with rates over the next year or two? I know a lot of people are looking at next week, and I am too, but let's see what's the trajectory and what's the odds of what they're going to do. So right now, the federal funds rate is 4.57. So what the federal funds rate is that's the rate that the Federal Reserve controls. They only control that number. Okay, that's it. They don't have a role in mortgages, car loans, anything else. They just adjust the federal funds rate. How they do that? By doing what they do. What is the federal funds rate? Well, basically it's, like Silicon Valley Bank. They didn't have enough in reserves to be solvent. So what happens is they need to, in some cases, they need to go to the Fed to get money, or go to another bank to get money to make themselves solvent overnight. That's what's called the federal funds rate. So it's just interbank lending. It doesn't really have anything to do with me and you. But what happens is when that rate goes up, all the banks, just think of like on the company level, when I said the producer price index, if producers' costs are going up, well, they got to pass it on. So what the banks do is their costs are going up. So what they do is then it has a trickle effect. Now your boat loans are going up, your car loans are going up, your credit card rates are going up, all short-term maturity loans, not mortgages, because they run on, if you guys are a regular viewer of my channel, those are off of the mortgage-backed security bond. Okay, so that's what all happens in the realm of the Federal Reserve. So let's go through here, and this is basically, this is a lot of things I do behind the scenes that I don't want to bore you guys with, but this is interesting. Okay, basically, this is telling us what the expectations are in the futures market. Now, the futures markets are in Chicago, and they're trading and doing their thing. So here's a chart that I just pulled up just now. It's from the Chicago Mercantile Exchange. Here's what the expectations are for the federal funds rate. So right now, you can see it. We're about 4.5. Rate in 4. What would you say? Federal funds rate is 4.57. Okay, 4.57. So we're right in this bucket here. So what's the expectations from the coming meetings? Well, this gives us the meeting on 3/22, which is next week. You scroll over here and there's a 75% chance, 74.5% chance that they're going to raise it to 4.75 to 5%. So that means they're probably going to raise it maybe a quarter. They could still raise it a half a point because that's what these numbers are kind of telling us. Okay, but what it's also telling us is the next meeting in May, there's a 50% chance at this time that they're going to raise it all the way up to 5% or 5.25%. So we have about 0.75% here that we don't really know what the Federal Reserve is going to do. But now look, all of a sudden, we see this starting to taper back quite a bit. So what this is telling us, saying in the June meeting, well, they're supposed to be bringing it, if they bring it all the way to 5 or 5.25% that you're seeing over here, with the June meeting, what they're going to do is, well, there's a 42% chance it's going to be back to 5. Okay, well, let's look at it here. Now there's a 42% chance that in July, it's going to be at 4.5. You can see how the numbers, look out, they're having us, a year and a half from now, most likely we're going to be back in the range at 3.5 to 4, 3.5, say to 4%. So that means the Federal Reserve will start cutting. When? I don't know. Nobody knows. I don't really know what they're going to do at the next meeting, nor does Wall Street, because you can see all right through here, these have been changing basically by the minute on what's going on with banking and what's going on with the CPI and inflation numbers. And tomorrow, once the PPI report comes out, that'll also change what these numbers are going to look like. And then you can go down through here and see, with a hike, 75% chance of a hike, go all the way down through here. And then you can see back in July, now no change or easing. So you can see probably by the middle part of the latter part of the year, there's a 50 to 60 or 80% chance they're going to start cutting. And this isn't me guessing. This isn't me trying to anticipate some things. This is what the futures market in Wall Street, where all the bigwigs are. You and I don't really delve in the futures market. There might be some of you guys that do that, but that's what the experts are telling us, and that's where we are right now. So I'll take any questions you have. That's why I'll do this, guys, every day if I can, and I'm going to try to do it right around market end so you guys can ask any questions, what's going on and so forth. So let's go to the first one and look at it and say, Dan, if banks have to put up collateral like MBSs to get the bail out money from the Fed, then why are MBSs not worth more? Is it because they technically are not being sold, just held to get the money? No, what the banks do is they've been buying treasuries. And the reason why they buy treasuries, there's no chance of default. Our government isn't going to default. So as a bank, you just want a bond or some instrument that basically is going to be there for sure. MBS markets can come and go and crash and do and everything else. Usually the bond market is pretty darn stable. Okay, the MBS markets are all over the board. They can buy stocks and things like that, but their board and the FDIC and things like that monitor those things. But the reason why they don't buy MBSs is that it's too risky because there's defaults. If you have a foreclosure, that's a default on that loan in that portfolio. Where if you buy a treasury, there's really no default risk at all. Period. That it's going to be there. Now, I don't think a lot of people anticipated the Fed raising rates this high, this fast. And saw the prices of most bonds just crumbling. And I don't know. I find it hard to believe that the Federal Reserve, didn't see this because they're all bankers on a high level. Maybe they did, maybe they didn't, but I think they just botched this one totally. But that was a great question. And then we have Kyle here. Looky who's here. Thanks, man. But that was a good question. The next question is, sorry, when I do this, my face goes away. Looks like the money flowing out of the banks went into crypto, which makes sense with the type of account holders that pull that out. Yeah, I'm in crypto. I don't, I made a comment yesterday's video. I got sold on, I got in the FOMO. I'll admit it. I was in the FOMO of that, and I saw my son making tons of money in it, and then some other relatives, and I'm like, okay, I'm going to dabble in this things, and it was crazy. It was FOMO, and then I got in it, but. Yes, some money's flowing into that. I think what happened was in the cryptocurrency arena, just a year ago, Bitcoin was at $64,000 a coin. Now it's 20, went to 18 or 16 or something like that. So it's on the rebound. People were expecting, okay, it's but I don't personally think of it as a hedge against inflation, because inflation since last year it raised its ugly head all the way to 9%, as we saw, and Bitcoin is plummeted. So, is it a hedge against inflation? I wouldn't buy it as such. I would buy it as a speculative, like I did. I just bought it as, I won't say play money, because all money is, but kind of my Vegas money. If it pans out, great. If I lose it, I don't really want to lose it, but that's my play money. Credit Suisse is next. If you know anything, Chai, if you know anything on Credit Suisse, I'd love for you to share it with us. Guys, I want your feedback in this. It's just not me talking. Let's have an environment here where we can help each other, because I don't want to be the controlling factor of this, because I watch so many videos and so many mainstream media stuff that it's just like, you watch, here's my analogy. You watch CNN or whatever, and then Fox News, and it could be snowing outside, and one will say, it's sunny and 80, and the other ones say it's, I don't know, raining. And they're all over the map. So I want to be your source for just giving you the information. You asking me, I'll provide you the information. I'll tell you my feedback, but I'm going to also give you material down below. Do your research. Okay. So for example, if you want to buy crypto, do your research, and I'll provide you some things there on the markets. If you want to ask me questions on things like that, I'll help you look things up. I'll show you where I go to look for my information. On the housing front, guys, we don't know what housing's going to do. I'll be honest with you. I'm a mortgage broker, been doing this for 34 years. If anybody anticipated, the bank thing happening yesterday, you couldn't have. Okay. Even Barney Frank, who created the Dodd-Frank bill, was an integral part of the banking system in 2010, sits on the bank that closed over the weekend. It was the second bank to close. So So a lot of people don't really know what's going on. Watch where you get your information, and don't, one of the reasons why I posted today is I saw some videos and some people saying, the banks are going to print money to, get themselves or bail themselves out. No, that's not how it works. Taxpayer money is going to fund all these places. No, the reason why there was a bailout in 2010 is because of the world crashed on subprime mortgages. Okay, that's how big that business was. Countries were buying more these bonds that had mortgage-backed, subprime loans in it, and they lost money. Okay, so that's what happened in those days. This isn't that. I'll say this is, these pandemic or these bank closures right now are part of the pandemic, COVID pandemic, and the Federal Reserve jacking rates so fast, so high. And the banks aren't, they're not innocent on this. They probably dabbled in too much speculation, on their side of it. It was like me saying, I'll buy Bitcoin, but it's just a little piece of my business. So if it makes it great, if it doesn't, great. But when you're relying on venture capital money and startups, if you have one, just think if you had, Amazon when they first came out, and you bought into them and you were their startup. If you had that one company or Facebook or Microsoft, you would have made billions. Okay, so they only need really a couple of these to pan out, but got too risky. And then with the Federal Reserve doing what they're doing, the mark to market with treasuries and all that stuff, that created a huge problem here. Hey, buddy. Hey, Rodney. Thanks for joining me, man. I know I didn't post this as I was going to do it today. I just kind of went on a whim because I see so much bad information out there that I wanted to just bring you guys in and say, guys, please help me share this information with others, because there's a lot of people just getting duped by just false news, false information. So I need your help out there. When will the real estate market use crypto? I don't know. You know what? I think there was somebody last year that came in and said that they would start using crypto as payments. That didn't last very long. Why I don't like, I didn't really think cryptocurrencies were going to do anything. It's not a long-term endeavor, is because the fluctuation in its value. I don't like your dollar. Your dollar's strong. Your dollar's, we have a national currency or a worldwide currency. Your dollar is going to be there. It's strong and everything else. There's really nothing backing it if you know the banking system. But cryptocurrencies are just, they're so volatile. Just think of those guys, those athletes that got paid millions of dollars in cryptocurrencies. And now, they're probably kicking themselves in the head because they just lost like 500, they went from 60,000 a coin to at one point, I think it was like 15,000 a coin. So they lost substantial money when it comes to that. But, I don't see that until, maybe cryptocurrencies really become a broad stream throughout the whole country and throughout the whole world. Let's see. And also accept. Okay, I get what you're saying. So yes, it's basically the same question. I'm just clicking these. So please, guys, watch your comments because I don't. What is the highest rate can an FHA loan go legally right now? That's a great question. There's a high cost. We have it built into all of our systems. It's a high cost trigger. It's so automated anymore. I should know this. I'm kind of embarrassed I don't. If Kyle was here, he'd log it right up and find it. I think the rate could be like 5% over a specific benchmark rate or something like that. But it would have to be pretty darn high not to really work, because all these rates and adjustments keep changing at all times. What I see a lot of times though we'll start talking about real estate if you guys want to get into the mortgage field, is when I get a loan estimate in, and in the cost piece of the loan estimate, I'll see sometimes that there's 5 points being charged to the borrower. And I'm like, you can't legally charge 5 points, because the most in lender fees you can charge is 3%. So like for us, we usually charge, the only cost we charge is $895 processing fee. We don't charge any other lender fees, underwriting fees, any points, anything like that, unless you want to buy down the rate. But you can't buy down the rate 4, 5, 6 points. You can't legally do that. But I'll see loan estimates come in all the time where it's 6, 7 points because they want to wow you on the rate. And then when it comes to closing, they'll be like, oh, we can't close at that rate because of this. So here's the rate we're going to have to get you. I see it all the time. By the time they do that and you catch it, it's too late. You can't really switch lenders. So that's one of the reasons why I do videos, and Kyle and I do videos all the time, is we just want you to get a feel for us. Call us, schedule appointments with us. If you're in the realm that you're looking to buy a house, we're not going to quiz you down why, and are you an idiot because you're buying a house or whatever. That's not it. There's a lot of people out there buying houses right now. If I was in a market that I needed to buy a house, because I always like owning a house, I would buy a house. Just telling you what it is, because I can always refinance. And based on these charts that we're seeing right here, I might have an option to refinance within the next year. Okay, so that's it. Let's see the next one. I think we got somebody join late. Sorry, I joined late. Not sure if my question is relative. Is it risky, in your opinion, to put earnest money down on a 12-month new construction for a demand area if my neighborhood, if we negotiate a float down rate? No. The one thing I could, by Jules Arthur, the one thing I could, based on the experience I had last year. Now, last year was going crazy with new construction, just crazy. The one thing I would ask you is, please, I'll say it this way. I would spend the money to get an attorney to review your contract and give you legal advice, because a lot of builders last year just duped a lot of people. For one instance, we had a gentleman that we needed to close on a Friday, and we couldn't get it all settled in time. So we asked the builder if we can close on Monday. 3 days later, said no. We're sending the contract and we're going to sell it to somebody else. The reason why: house appraised for $100,000 more than it was than the people were buying it at. The frustrating part of this is the builder is the one that screwed up the whole transaction. We needed occupancy permits, water certificates, all this other stuff. So we asked for a 30-day period for them to send us all that information. They sent it to us on that Wednesday and said we had to close on Friday or they were rescinding the contract. And I was like, guys, we can't legally do that because we need a 3-day or we need a 3-day period before we issue the closing disclosure and we can close. So can you give me till Monday? And they said, no. I've never had that happen ever in my life. Now, the people got the money back, but once you put the earnest money down on new construction, most of those contracts are reading in complete favor of the builder. So the only thing I'd ask you is get an attorney involved. Make sure there's some loopholes there for you to get out of that, and make sure there's no easy loopholes for the builder to get out of it. I don't think in today's world right now, you're going to have a lot of builders do that with you because they're just excited you're buying their house. But I would still get an attorney involved and ask them those questions just to be safe. So thank you for joining in. Let's see. You have a lot more questions, so let's go through it and I'll answer those for you. My partner and I are waiting for a listed neighborhood in the North Austin. We are really they seem to have a lot of demand right now, even at the current rates. Okay, so here's an analogy that I have. And guys, I do this every day. I could show you the board. We probably are going to have, I might have one of the best Marches I've ever had in my history. Okay, here's what happened. Just my business partner here. His father-in-law passed away Thanksgiving Day, unfortunately. So him and his wife went down there recently and they cleaned up everything and they wanted to put the house on the market because we all live in Chicago and this property was in North Carolina. So they met with a realtor. They cleaned everything out, met with a realtor, and the realtor said, I think we can get about $390 for it. And Alan was saying, he's like, well, everything that I'm showing shows about 400, 410, something like that. He said, well, so the realtor's like, oh, okay, well, let's try. So they put it on the market at, I think it was 410, 400, something like that. They end up it went on the market on Friday. They had 31 bids over the weekend. The final winning bid was on Monday, $40,000 over asking, and it was a cash offer. So you tell me how soft that market is. Just saying. So are some areas probably bad, going to get hammered? Yeah. Some areas aren't. So that's what I would say. You can't just paint over everything with a brush saying, oh, the whole world's going to crash. There's pockets. Like I use this analogy. I'm from a town of Fallensby, West Virginia. You guys probably never heard of it. No disrespect. I love the town. My mother still lives there. My in-laws, everybody lives back there, basically. The markets, yeah, they saw, some values going up and up and up. They didn't see a 30, 40, 50% increase in values over 2 years. Thus, they're not going to see a 20, 30% reduction. Basically, their housing is just going to flatten out, might drop just, a percentage or two, but it's not going to be crazy. You're in Austin, you're in San Diego, you're in New York. It's nuts. Okay, so you can't just say, the whole markets. I watched a video yesterday, and the young gentleman says, well, builders have a ton of room to move right now. I could expect, housing prices to drop an additional 30%. Okay, so on average, we're seeing about an 8% or so drop from June of last year to now. Okay, so that means 8%. So if it drops 30% more, that means it's close to a 40% drop in values. I can come out here and tell you that's probably, I can't say with certainty, but if that happens, you're going to have the whole world implode. Okay, there is no reason for housing to drop that much. The reason why housing dropped back in 2008, subprime mortgages, people were forced, and I stress that word, forced to sell their homes. Okay, forced. They couldn't make the payments. They were stuck. Millions of people are in that situation. So you have millions of homes coming on the market. So now when you see, sales and inventories down and people saying, see, told you, sales are down dramatically. Sales, because it's the number of properties on the market. We don't have millions and millions and millions of homes on the market. And thus, you don't have that crash in value to gobble up that stuff. We want limited products. Okay, right now, and I know it's tough for you guys out there, but if you had, everybody and their mother put their houses on the market, you could potentially have a drawback. But what's going to hold a lot of this into place are people like me, people that have been in their house, they've been in there for a couple of years, and they've refinanced. They have a rate that's, my rate. I keep saying this every day, but I'll say it: 2.5%. So if I went and bought the same house that I have now with the same mortgage, my payment would double. Why would I? Okay, so that's the point behind a lot of this. A lot of people are not going to put their houses on the market. So you're not going to see huge inventory. When you start seeing a huge spike in inventory, that's when you want to get worried. And then on the foreclosure front, look at it this way. Foreclosures. If you bought a property and there's really no loans out there, they'll give you 100% loan to value, meaning no money down other than VA and USDA. So most people put down 3 or 5% on their house. Let's say they bought it a year ago, 2 years ago, 3 years ago, let's say. What happens? Well, you probably saw a 25, 30, 40% increase in the value of your home. So now if you get in a tough position, you would be best off to sell the house instead of go to foreclosure, because you have the equity, or you should have the equity. Now, what threw a little monkey wrench in some of this is the forbearance. Okay, what happened was back in the pandemic time, where people had, I should probably just open up my screen so you guys can see me, but let's see if this works. So what happened during the pandemic time, and I was on people's YouTube video channels talking about this and everything, and I basically got blackballed for a lot of people by providing the truth. I said, here's what's going to happen is we have forbearances on mortgages. What that meant is back in 2020, if you had a mortgage, probably 80 or 90% of the people had a mortgage that was qualified for this. You could forbear, meaning not make a mortgage payment for 18 months. So you imagine going 2 years without a mortgage payment. During that time, and it's still not back into place, there's student loan deferrals. Now, guys, I'm not complaining about student loans. We need students going to college and all that other stuff. Some people took some things out of context that I said yesterday, but student loans have been on deferral for 2 years now, maybe 3 years. So if you didn't have a mortgage payment and a student loan payment, and you didn't lose your job, and you got stimulus money, and you had a bunch of money, what are you going to do with it? Well, we were in pandemic mode, so you couldn't go out to dinner, you couldn't go to see movies and everything else like that, so you just bought stuff. Okay, well, how do you buy stuff? Well, the whole world was shut down, so manufacturing shut down, shipping shut down. What happens? Well, you gobble up all the inventory, now there's no inventory left. So what you're doing is you have to pay more for an item because they're scarce. And then what happened is, employers got back to work and everything else, but then you had a bottleneck and you had the supply chain issue. On top of it, you have the Russian-Ukraine war. So all these played a role in this. There's no one entity that's like, okay, this is basically what caused this thing. So I know I got off on a tangent, but I want you guys to feel the passion that I have, because I want to put you in a good spot. I'm not out here to sell you any products. I'm not selling you a course down below that I'm going to charge you $1,000 for, or sign up for this because we're going to do this. I'm just here to, you guys, use me as a free tool, and I can help, answer any questions you have. And I'll be honest, if I don't know, I don't know. I'll give you some tools maybe to look it up so you can do it on your own. Think for yourself. That's what I want you guys to understand. Okay, so the next one is, but we don't want to put money down too fast, just out of fear, really not a good time. Okay, so this is still on the purchase thing. I don't want you to put the money down too, but please get an attorney, get legal representation. A lot of people think of it, well, that's like, I'm just throwing money out the door. It's $500 for the attorney. All they're going to do is do this and that. They'll find a loophole for you if there's a loophole. And I would suggest you do that now before you sign the contract and you find out it's too late at that point. So that's my point there. Next question we have is, I don't think people understand crypto and cycles. If you bought during the Bitcoin was 40 to 60, you bought tops and have to wait in the next cycle. Next cycle is starting to buy bottoms. Got it. So if you please join me on other events, Soul Racks. Please put in your context. The Wednesday lives that Kyle and I do, we basically focus and we want to talk with first-time homebuyers, because there's a lot of bad information out on that. I hear people talking about, they'll tell you sales are down, sales are down 35%, but they'll spin it in a way that you think prices are down 35%. So those are the ones that I really want you to stay away from. I don't care if you buy a house or not. I truly don't. I don't care if you invest or not. But if you do, I want you to be educated on it so you don't get taken advantage of and you don't lose. Okay. The next piece of this is, I think we're going on a crypto frenzy here. And I didn't mean this to be crypto. I own some crypto, or some Bitcoin, Ethereum, and Cardona, and I got them. I just hold them. They're in something I don't even really pay attention to. Crypto also has an inherited theft issue with most users and big exchanges under securing authority data, as well as custodial. When millions are at stake, you need a very secure system. Thanks, Dave. I appreciate that. What I did is I bought it through it's Grayscale or something like that, through Schwab. That's who I do my trading through. I was able to buy some Bitcoin and Ethereum directly through PayPal, and I thought that was a really nice system. But it wouldn't allow me to stake my currencies and gain, earn interest on that and so forth. So if you don't understand what I said, you're not into crypto, that's okay. You're probably, put your money into a CD right now that you can probably get 4 or 5% on. Let's see. I'll go back through. Sorry if I skip. Hopefully we can see real estate utilize the opportunity of crypto and the lenders can cash out if need be. Soul Racks, I get it, but there's still too much volatility in it. As a vendor, or say, I wouldn't want to get paid in cryptocurrencies, just saying, because I don't know, the next day I might wake up and there was a run, or there was a dump. And now I got a $10,000 paycheck and now it's worth $3,000. I can't pay my bills. Okay. So, that would be that. Let's go through here. I'm just clicking down through. Great advice. Thank you. Thanks for joining me, because without you guys, I'd be sitting here talking to myself. I'll definitely join. So please join in. I'm going to try to do these every day. I know you guys like a set chart. It's just hard for me to do that. I do run a mortgage business, and we are getting busy. I just hired a few more people. I just reached out to some processors today because we need processing help. So that's going to do it for today. I thank you guys for being on here. I know we were on here a little bit longer than usual, but I'm trying to debunk a lot of this BS stuff that people are putting out there, and today I was like, you guys are talking about the bank is going to print money to bail themselves out. It's not how it works. And if you watch anybody talk about things like that, please turn the channel, because they're probably just trying to sell you a service, or they're just trying to get some views and make like the world's imploding. It's not. Banks are okay. The Federal Reserve is going to take action on this. I can guarantee you that, but they're not going to bail out banks with taxpayer money at this point. They had to do it in 2010 because basically the world was shutting down. We got a last one, and then I'll answer this one, and then I am getting out of here. Let's see what we got. What's the best way to sell your house quickly if you don't want to go through a whole real estate listing process and are okay with letting someone else make a profit when you have so much equity in your house? There are services out there. I've always sold my house by myself. I just put a for sale sign in front of my yard, and honestly, what you're going to have is realtors, mainly realtors, calling you, and just work a deal with them. Just say, hey, if you find a buyer for me, I'll pay you 1%. Oh no, I need 2 or 3, I'll pay you 1. And if you don't like it, then, if you find a buyer, let me know. Click. You're probably going to get more traction from realtors than anybody, but there is no quick fix way. I wouldn't just say, you want to do it fast and leave a bunch of money on the table, because some of those companies out there, they'll buy your house, and then you'll find out the next day they'll list it for like 60, 70, 80,000. I mean, if you want to leave that much on the table, heck, you might be able to find somebody right in our group here. Join me live tomorrow. Let me know where you guys live. We might even be able to find you a buyer right on our live stream if you're willing to give up that great of a deal. So, Aaron, if you would, please join Kyle and I tomorrow night on our live event. Ask that question. There might be people on there, especially realtors or somebody like that, can give you really good input on there, or might even be able to find you a buyer right online. Let's see the last question we got. But Dave, thanks for the saying good show. Hello, Dan. Any products to tap investment properties equity? You betcha. We have. There's so many investment property products out there that you guys don't even know. We're actually working on it. Kyle and I are working on an AI. It's going to be like mortgage underwriting AI tool that we're going to have on our website. You can ask these questions. There's a ton of ways to do this. There is DSCR programs where you can cash out on the property, and all that's used is the appraisal of the property and how much rent you're getting from the property. As long as we can match up the payment to how much rent you're receiving, you're good. But you have to have good, credit and equity in the property and so forth. That's probably the number one way to do that. We're also working on a quick and easy home equity loan product that you can close. We tested it about a month ago. We had our first client close in 5 days, and that is in the works right now. And I don't know if you guys saw Kyle. He's trying to convert his. So Kyle is on our team. Check out his videos. Great guy. Knows his stuff. His channel, basically my channel, is more economics like this. You go to Kyle's channel, he's going to give you updates on, what's the requirements for an FHA loan, what's the requirements for a USDA loan, all these other things. But to answer the question to Manny Rodriguez on the investment properties, please, down below, there's a Calendly link. And if it's not down there right now, it'll be there shortly once we get this video, prepped after we go live, and it'll have a link down there to schedule a meeting or consultation with us. This is basically what we do on the consultations. We can do them Zoom or we can do them over the phone. But what I like on Zoom is we can actually show you behind the scenes what the heck we're doing. So I had a consultation call with all my salespeople this morning, and we're going to unveil behind the scenes with you guys on how we scan the whole country to find you the best rate in the market at that time. And we're going to show you all the lenders. We're going to show you everything there. So you can, I'll just pull it up and say, okay, here's the 80 quotes we just got you. Which one you want? You want to go with the best one out there that has that rate with no fees? Or do you want one down here that has the same rate, but you're going to pay $5,000 for it? And you choose. I would hope you choose the one with the best rate, no costs. So that's it for today. So guys, thank you so much for watching. God bless you. Don't forget tomorrow to join us live, Kyle and I, from 8 o'clock Eastern time we usually go from 9 to 10, or we try to get through as many questions as we can or until we fall asleep. So thanks again for watching. Please, if you don't see anything down below in the description, it will be there shortly because I'll be editing this and adding some things to it here as soon as we complete. So thanks again for joining me, guys. I hope to see you tomorrow. Take care. Bye-bye.